There are exactly 19 days left before June 30th, and if you were born before 1971, there are 5 specific forms sitting on the IRS website and the Social Security Administration website right now that can put real money back in your account before that date passes. Not next tax season. Not when you remember to ask your accountant. Before June 30th. 5 forms that most seniors born before 1971 have never filed in their entire lives. And every single one of them is free, available right now, and sitting there waiting for the person who knows to ask for it. Before I give you Form 1, I need to address the 2 assumptions that cause most people to click away from a video like this and leave money on the table. The first assumption is that tax forms are only for seniors who are struggling financially. So, if you are comfortable, you assume none of this applies to your situation. The second assumption is that this kind of thing is only for wealthy people with complex financial portfolios. So, if you live mostly on Social Security, you assume it is above your situation. Both assumptions are completely wrong, and both are quietly costing people at every income level real money every single year. This list is for every senior born before 1971, regardless of what your income looks like right now. Here is the honest truth about why these 5 forms go unfiled year after year. The IRS does not advertise tax savings. They collect. Your tax preparer does not automatically file forms you never asked about. They file what is in front of them. And the June 30th deadline is not arbitrary. For several of these forms missing, it means waiting a full 12 months to recover money that is already legally yours right now. Every dollar you do not claim is a dollar that stays in the system. That is not a conspiracy. That is just how a passive tax code works. It rewards the people who know to act and quietly takes more from the people who do not. Subscribe to this channel right now and turn on the bell. I am building this into a community of 10,000 seniors and family members who refuse to keep overpaying and underclaiming what the law already says belongs to them. Every form in this video is real, verified directly from irs.gov and ssa.gov, and completely free to file. The people in this community file before the deadline. The people who are not yet subscribed find out after it passes. Subscribe now and let us get into all 5 forms. This video is for educational purposes only and is not tax or legal advice. Tax laws are complex and your numbers are unique. Always consult a licensed CPA, enrolled agent, or qualified tax professional before taking action on your specific situation. Before Form 1, drop a comment right now telling me whether your tax preparer has ever specifically asked you about your pension withholding amount or your Social Security withholding rate. Yes or no? That one answer tells me exactly how many people watching this video are being left completely on their own when it comes to these 5 forms. Form 1, Form W4P. This is the single most ignored form in the entire IRS catalog, and it is the one that puts the most cash back into your monthly check the fastest. It is available free at irs.gov. Form W4P controls how much federal income tax is withheld from your pension, annuity, or IRA distribution every single month. Here is the problem most seniors never find out about. When pension programs and IRA custodians set up your distributions, they either withhold at a default rate that is almost always set too high for seniors, or they use a generic calculation designed for working adults, not for someone 65 or older, with the additional senior deductions that significantly reduce their actual tax liability. The result in both cases is the same. They hold back more every month than you actually owe. You get a refund in April, and you feel good about that refund. But here's what that feeling is actually costing you. That money was yours all year long. You gave the government an interest-free loan for 12 months, while it should have been sitting in your account paying your bills. Consider a retired nurse receiving a $42,000 annual pension. Her custodian withholds 10% automatically, $4,200 a year held back. But because she is 65 with the additional standard deduction for seniors and the current senior bonus deduction, her actual federal tax liability on that pension is closer to $1,600, not $4,200. That is $2,600. She has been lending the government every year for free. That is over $200 a month that should be in her bank account. Form W-4P is how she fixes it. Download it from irs.gov, complete the withholding worksheet using your actual income picture, including your senior deductions, and submit it directly to your pension administrator or IRA custodian. The adjustment takes effect the following month, not next year, the following month. Form 2, Form W, 4V. This form is for anyone collecting Social Security, and it controls something most seniors have never thought to question: the withholding rate on their Social Security check. Here is what most people do not know. Social Security payments arrive with zero federal tax withheld by default. For some seniors whose combined income falls below the threshold where Social Security becomes taxable, zero withholding is exactly right. But for millions of seniors born before 1971, whose Social Security is partially taxable, that zero default creates a genuinely painful April surprise. They owe more than they expected, sometimes significantly more. And in some cases, they get hit with an underpayment penalty on top of the tax bill, all because nobody ever told them Form W-4V existed. Form W-4V allows you to elect a specific withholding rate on your Social Security income: 7%, 10%, 12%, or 22%. You choose the rate that most closely matches what you actually owe based on your full income picture. But here is the other side of this that matters just as much. Some seniors chose a high withholding rate years ago when their income was higher. Now, in retirement, their income has dropped significantly, but the withholding rate from a decade ago never changed. They are over-withholding by hundreds of dollars every single month on a fixed income that cannot afford to keep feeding an outdated estimate. A married couple collecting a combined $34,000 in Social Security at a 22% withholding rate could be overpaying by nearly $200 a month when their actual current rate is closer to 9 or 10%. Form W-4V adjusts that immediately. Submit it through your My Social Security account at ssa.gov. Mail it to your local Social Security office or bring it in person. The correction takes effect within 1 to 2 processing cycles. Quick question before Form 3. Are you currently having any federal tax withheld from your Social Security check? And do you actually know whether that amount is accurate for your current income? Drop yes, no, or not sure below. I am building a follow-up video specifically on calculating the right withholding combination for different retirement income situations. And your answer tells me exactly what that video needs to cover. Form 3, Form 1040-SR. The IRS created this form specifically for taxpayers aged 65 and older, and millions of seniors still file the standard 1040 every year, completely unaware that a version designed specifically for their situation exists. The 1040-SR has a dedicated section for calculating the additional standard deduction for seniors 65 and older. It has a cleaner and more intuitive layout for reporting Social Security income and pension distributions, the two most common income sources for people born before 1971. And it has the built-in sections for the senior bonus deduction that many preparers and standard software programs do not flag automatically on the regular 1040. If you use a tax preparer, ask them one specific question before you sign your return this year. Are you filing my return on Form 1040-SR? If the answer is no, ask why not. If they cannot give you a clear, specific reason for using the standard 1040 instead, that conversation is worth finishing. If you file your own taxes using software, confirm in your profile settings that your date of birth is entered correctly. That is what triggers the software to route you to the correct senior version. Form 4, Form 8606. This is the form that prevents you from being taxed twice on the same dollar, and it is the one that retirees with traditional IRAs are quietly losing real money to without any awareness that it is happening. Here is the situation. When most people contribute to a traditional IRA, those contributions are tax deductible, and they pay tax on the money when they take distributions in retirement. That is the standard setup, and the tax treatment is straightforward. But some people, particularly those whose income in certain years was above the deductibility limits, made what are called non-deductible IRA contributions. They put after-tax money into the IRA, money they had already paid income tax on. If nobody tracked that after-tax amount, what the IRS calls your IRA basis, then when you start taking distributions in retirement, the IRS treats every dollar coming out as pre-tax money and taxes it again. You have just paid income tax on the same dollar twice. Once when you earned it, once when you withdrew it. And you may have had no idea that was happening for years. If someone made $45,000 in non-deductible IRA contributions over their working life without filing, Form 8606, and their IRA custodian reports every distribution as fully taxable because there is no documented basis on file at a 22% federal rate that is nearly $10,000 in taxes they never should have owed. Gone. Permanently. Unless someone goes back and addresses it. Form 8606 documents your IRA basis. You file it with your annual tax return for any year you make a non-deductible contribution. And if you have made past non-deductible contributions without filing it, you can file amended returns to establish and document that basis, going back to those years. If there is any history of IRA contributions in years where your income may have been above the deductibility limits, this is a conversation to have with your CPA before June 30th. Before Form 5, drop a comment telling me which of the 4 forms I just covered was completely new to you today. Tell me which one, and tell me why you think nobody ever brought it up before. That comment helps me understand which of these forms is being most systematically left out of the standard senior financial conversation across this country. Form 5, Form SSA, 4. I told you at the start of this video that Form 5 has the highest dollar impact per month of anything on this list. Here is why. If you are enrolled in Medicare and your income from 2 years ago exceeded certain thresholds, Medicare is charging you a monthly surcharge called IRMAA, the income-related monthly adjustment amount, on top of your standard Part B premium. In 2026, the standard Part B premium is $185 per month. IRMAA surcharges add anywhere from $74 to $443 per month, on top of that per person, depending on your income tier. For a married couple, both paying surcharges at different tiers, the combined monthly extra cost can exceed $800, nearly $10,000 a year, paid silently out of Social Security before the deposit ever reaches your account. Here is the trap that catches retired seniors specifically, and the part most people never figure out unless someone explains it directly. Medicare does not use your current income. It uses your tax return from 2 years ago. If you retired in 2024 and your income that year was elevated because you worked for the first several months of the year, sold a property, took a large IRA distribution, or received any kind of one-time income, Medicare used that elevated 2024 income to set your 2026 premiums, even though your income dropped dramatically when you retired. Even though you are now living on Social Security and a modest pension, that is a fraction of what you earned in 2024. You are paying IRMAA surcharges based on income you no longer have and will never have again. Form SSA 4 is the correction mechanism built directly into the Social Security Administration system for exactly this situation. It is called a life-changing event appeal. Filing it tells SSA to use your current reduced income instead of the 2-year-old figure that no longer reflects your reality. 8 qualifying life events make you eligible to file it. Retirement, you stopped working. Reduction in work hours or income. Death of a spouse. Divorce. Loss of a pension. Loss of income-producing property. Marriage. Or receipt of a one-time employer settlement that temporarily inflated a prior year's income. The most relevant for most seniors watching this video is the simplest one: you retired. That alone qualifies you. A retired couple in North Carolina, both 67, both retired in mid-2024 after long careers, were each paying elevated IRMAA surcharges throughout 2026 based on their combined 2024 income of over $250,000. Their actual 2026 income was $58,000 combined, Social Security for both, plus a small pension. They were paying surcharges on income they had not earned in nearly 2 years. Each filed Form SSA 44, checking the work stoppage box and documenting their current projected income with supporting documentation. Both appeals were approved. Their combined monthly premium savings exceeded $360 per month, more than $4,300 per year, one form each, free at ssa.gov. Approximately 20 minutes to complete. 14 months of overpayment recovered, starting the cycle after approval. Here is the priority order if you are only tackling one thing this week, with June 30th, 19 days away. If you are currently paying an IRMAA surcharge, start with Form SSA 44. The monthly dollar impact is highest and the correction is the fastest to take effect. If you are receiving pension or IRA distributions with withholding that seems higher than what you actually owe, go to Form W4P second. If you collect Social Security and your withholding situation does not clearly match your current income, Form W4V is your third step. Then confirm with your preparer that they are filing Form 1040, SR for your return. And if there is any history of non-deductible IRA contributions in your past, bring up Form 8606 with your CPA as part of that same conversation. Every form I just covered is real. Everyone is free. Form W4P at irs.gov, Form W4V at ssa.gov, Form 1040, SR at irs.gov, and in every major tax software program. Form 8606 filed as part of your annual return. Form SSA 44 at ssa.gov. Submit online through My Social Security. Mail it to your local SSA office or deliver it in person. None of this is automatic. The government does not refund you for the form you forgot to file. No one mails you a check for the appeal you did not submit. The entire system rewards the people who stand up and claim what is already theirs. These 5 forms are how you stand up. June 30th is 19 days away. Subscribe. Share this with one person you know who was born before 1971. A parent, a neighbor, a sibling, a friend who just retired, because the odds are very high that they are missing at least one of these forms right now, and it is costing them money every single month. I will see you in the next one.